So thank you. And I'm now going to hand over to Sean Murray, our CEO, who's going to take you through his report and consideration of the accounts.
Thank you very much, Sheila, and good afternoon or good morning, as it still is, to everybody out there. Sheila, could I have the clicker, please, if you don't mind? Thank you very much. I'm proud to present another set of results for Linn INTO Credit Union for the financial year 2021-22. It's been another positive year for our credit union, and it was stellar across a lot of our leading indicators. Our loan book increased by 10% and now stands at the highest figure ever of 92 million. Our membership increased by 1,461, with 519 of those current accounts opened. 4,384 of our members borrowed 43 million, and more than 21,000 of our members, or 86% of the membership base, completed a transaction in the last 3 months. Almost 1,000 members are using us for their day-to-day banking current accounts, and another 800 are using us for the budget account service. There was an approximate 10% increase in all transactional activity this year, and all of that is underpinned by a surplus of 1.4 million, despite a challenging investment environment. Our strategic ambition is to be the trusted financial partner to all members of the INTO, the RTAI, and their families by improving their financial well-being through member-focused products and services. Our team of real people are the most important element of providing that service, and they're a wonderful bunch of people to work with. The team's passion and enthusiasm, encouraged by your board, is to make sure that you get the best service. This marks Linn as different to other financial institutions. There are many pleasing examples of where we've helped members in difficult circumstances. Delivering excellent service for our members is built on having a strong culture within Linn. Thank you to our members for your continued loyalty and support. We hope that our service and competitive pricing meets your high expectations. On the financial summary, I suppose all the above leads to a solid financial performance. The accounts are set out on pages 12 to 39 of the annual report and starts with the director's report through to the financial statements and notes. I'll start with the income and expenditure account on page 20. And again, it was a positive year with a 10.9% increase in our loan income, supporting the overall operating surplus. The increased interest income on loans is as a result of that increased loan book we talked about. Unfortunately, investment rates continued to be very poor last year, and the paltry return of 0.14% is challenging. In recent months, we are seeing signs of a turnaround in investment returns, and we hope to see further increases next year. The expenses are summarized on page 20, and we go into more detail on page 39. The expense base has grown by 2.9% to 4.5 million. Employment costs were down 3.9% last year, primarily due to some vacant roles, which resulted in increased professional fees. The overall trend suggests that these costs will increase next year as we continue to build our internal capacity and capabilities. These are our largest expense item at just under 1.7 million. Our priority is to ensure members receive a really positive experience from Linn. The operation is resource intensive, and as a result, it's an operational cost of running a great credit union, protecting our assets and remaining compliant. Our people are very important to achieving this. Other management expenses are 144,000 higher than last year at 2.6 million, and these are detailed on page 39. The increase is primarily due to the increased professional fees, up 252,000 or 23%. IT-related costs are up to 356,000, up 16%, or circa 74,000. And savings and loans insurance costs of 532,000, up 6%. Other large management expenses include regulatory costs of 473,000, which is down 8%, primarily due to a reduction in the funding levy year on year. And marketing costs are 244,000, also down 4%. Overall, we anticipate that the cost base to be under pressure again next year, with inflation and the general costs of goods and services increasing. Bad debt costs were a positive expense item in 2022, increasing the surplus by 32,000. These are outlined in more detail in note 5 on page 30, where you will see recoveries from written off loans were lower in 2022 as compared with the previous year. Overall, the operating surplus was 1.4 million, up 27.6% from last year. Our operational cost to income ratio is 77%, which is reduced from 84% last year. And this compares favorably to the wider central bank sectoral average of over 86%. Nonetheless, managing this ratio will continue to be a key focus in the coming years. On page 21, our balance sheet now exceeds 73 million. There was a reduction in total assets this year as a result of the savings cap, a drop of 5.9%. The strength of Linn is another critical strategic priority for our board and management team. Having to ask our members with more than 40,000 to move savings out of the credit union paradoxically strengthened our balance sheet. We are very grateful for the support and cooperation of all members as we delivered this project. Your reaction underscores the importance of maintaining a solid credit union, which continues to be a fundamental principle in our strategic ambitions. There was a 14% reduction in our total investment portfolio, and assets combined to 159 million, and a full breakdown of the deposits and investments is on page 30. We continue to prioritize a strong liquidity position and the safety of assets, overtaking any unnecessary risks to generate a return on the portfolio. Our liquidity position and investment portfolio are outlined in detail in note 6, 7 on page 30, and we continue to manage our investment assets prudently. The real success story this year was in our loan book. We saw a 25% increase in the volumes of loans issued, which constituted a 10% growth in the overall loans outstanding. The total loan book now stands at 92 million. And a key ratio is our loan to asset ratio, and this grew to 33.7 million, a combined result from the loan growth and the reduction in total assets. Again, favorable in comparison to the sectoral averages of 27.1%. The rate of return on our loans was 6.2%, demonstrating the strength of this asset class. As I say at presentations, the clue is in the name, credit union. Our main purpose is to support INTO and the RTAI community with loans. We make decisions that are in the best interests of the members and continue to help teachers. Last year, we lent 43 million for many reasons: a new car, to put yourself or your children through college, or to complete an energy retrofit to your home. Overall, 1 in every 7.5 primary school teachers in Ireland are borrowing from Linn. Loan provisions and bad debts remain stable, and we held our provisions at a similar level to last year. The provision information is in note 8 and 9 on page 31, and a breakdown of credit impairment is in note 19 on page 35. Our fixed assets have a net book value of 3.7 million, and a full breakdown of the fixed assets and the movement within the year is outlined in note 10 on page 32 of the annual report. Debtors and prepayments were 10.9 million, with the majority of this, or 10.2 million, related to deduction at source and due from the Department of Education. Our member shares dropped by 7% in 2002, in line with the savings cap and monthly lodgement restrictions. Total savings held in the credit union now stand at 232 million. And there's a very broad breakdown of these savings between current serving teachers and retirees. We expect that the changes made in the last year, that our savings growth trajectory is now on a more sustainable footing. But we will continue to carefully manage future savings growth. Current accounts continue to grow, with 519 accounts opened in the last year and almost 1,000 accounts in operation. This was supported by our initiative to offer the first year's account maintenance fees for free. And again, we look for your help in encouraging people to open a current account with Linn. The credit union holds 36 million in reserves, and our capital ratio is strengthened to 13.1%. The movement in reserves are outlined on page 22, and in more detail is provided in note 18 on page 34. This is an area where Linn is much lower than the comparable sectoral averages at 16%. A strong capital position is the foundation for a successful credit union. while interrelated with holding an excellent common bond and offering relevant services to our members. Reserves are generated from surplus of the credit union, and our strategic plan continues to focus on growing the loan book with the resultant surpluses supporting the capital position. Dividends are also paid from operational surpluses, and in 2022, the board are again prioritising strengthening the balance sheet over paying a dividend. So no dividend is proposed to members in 2022. The cash flow statement is on page 23. Our accounting policies are outlined on pages 24 to 29, with the notes to the financial statements following. I don't propose to go into more detail now, but I'm very happy to answer any questions at the end. You'll note that the presentation of some of the figures has changed from 2021 book to the 2022 book, and this is in line with accounting standards and practices, and it's in agreement with our auditor. These changes mean that a direct comparison on certain figures is not possible book on book. However, in the 2022 book, we've presented the comparable figures for 2021. We do believe sustainable growth is achievable. We will continue to focus on our strategic initiatives and invest in technology to enhance your experience. Next year, we are confident that our membership will continue to increase. Our constant worry is the uncertainty in the economic situation and that the cost of living impact has an impact on loan demand. We know our loan rates are very competitive and very attractive, and more members are interested in our current account, our budget account service from Linn. Everything we do is backed by a friendly and professional voice from our team who are always available to help. Before I finish, I want to recognise the great support Linn receives from the INTO President, John Driscoll, and General Secretary, John Boyle, and all of the team in the INTO head office, and indeed everyone around the country. We are also supported by Billy in the RTAI, the Department of Education and Skills and Pension Schemes, our friends in the teaching colleges, and all the members who helped to spread the word about Linn. Finally, our team remained the secret to our success. As a leadership team, we try to create an environment where everyone can do their best work and place a significant priority on the development and growth of our team. Everyone plays a critical part in delivering excellent service to our members. And I want to express my sincere thanks to the dedicated team and also to the board and the board oversight for their consistent support. We strive to be your trusted financial partner. Linn is sustainable when members borrow from us and use us for their banking needs. Thank you for choosing Linn. I'm happy to propose the accounts to the meeting and answer any questions.
Thank you very much, Sean. That was a very comprehensive account and a good story in the main.